Hello again, everyone from Sprott Money News and SprottMoney.com. It is time to wrap up the month of July. It's been a crazy month. And boy, it looks like we're going to have some crazy months ahead as we move toward the back third or so of 2023. Joining me to wrap up this month is my old friend David Brady. David, like me, a columnist at Sprott Money. You can find his work at silverchartist.com. You can also find him on Twitter at Global Pro Trader. And like I said, you can find him with a weekly column here at sprottmoney.com under the Insights tab. David, thank you for spending some time with me.
Oh, it's great to be back with you, Craig.
Now, we got a lot to talk about, no doubt about that, with prices moving all over the place. If anything, I want to remind everybody, though, summer, a great time. Well, what isn't a great time to be added to your stack? The summer sale is still in progress at Sprott Money, the summer bullion sale. Go to sprottmoney.com. You will find great deals through the month of August, all the way, I think, to the August 25th or so. So be sure to check out their site, look for some great deals on bullion storage. You can also give them a call at 888-861-0775. Somebody will be happy to help you out. Thankfully, David is happy to help us out and make some sense of all this. As the month has progressed, we've seen the dollar go down, the dollar go back up, the metals go up, the metals come back down. David, just this week, as we record this on Friday the 28th, we looked pretty good after the Fed. Then we got a whole bunch of pretty solid economic data out of the U.S. on Thursday, and everything went right back down. As we wrap up this month, before we look ahead, what really caught your eye and what stood out?
Well, going into the ECB and the Fed, one of the reasons why the reasons for the dollar to continue lower were we got weaker than expected payrolls, and we got weaker than expected CPI and PPI. And what puzzles me is why the Fed is still pounding the table on inflation to the extent that they are, because if you look at what happened to today, actually, I think in core PCE, which is their primary inflation indicator, fell from 4.6% to 4.1. My point is, how fast do you need this to go down?
Yeah.
And you've already raised rates over 5%. Shouldn't you pause and see what the effect is? Because based on what we just saw in core PCE and prior to that, the CPI and the PPI, it's already taking care of itself. So going back to the dollar, that's what tripped it up and pushed it down below 100, was this weaker data. And then going into the meeting just a couple of days ago, the Fed was expected to raise rates 25. That was already baked in. You just look up the CME tool and you'll see the probability was 100%. So that was already baked in the cake. The issue was the comments going forward. And they were kind of like, no big deal. And I also said that, watch for the ECB too, because in prior meetings, we've had the case where, and it's interesting how they've kind of followed each other one day after the next. I don't know if that's by design, probably is.
Yeah.
But I said, wait for the ECB, because in previous meetings, we've had the ECB come out and surprise in some way or another, usually in the comment section as usual. And that has changed the dynamic dramatically. Didn't happen this time either. It was basically a yawn, So what happened was then the following morning, and I'd love to get your 2 cents on this. We had the GDP data, we had durable goods orders, and we had home sales. All were unexpectedly, surprisingly strong. Now, I posted this on Twitter, and I went and looked out. Wait, hold on a second. Retail sales adjusted for inflation were down 1.5% year over year. Retail sales are consumer spending, whatever you want to call it, are 70% of the economy. Yet you're telling me GDP is going gangbusters? Okay, but here's the upside. How much worse can it get?
Right.
So a lot of people are suffering a little pain here, especially in silver. I posted the chart on Twitter yesterday, and zoom. And I warned about this earlier on in the week. because, and you watch this religiously like I do as well, the COT data showed that the shorts on the silver, on the COMEX silver, jumped dramatically on that part of the banks. Well, that tells you something's coming. And here we are. The banks may have put, covered some of those shorts with this dump. We might get a little further on the downside, but I'm everybody's getting, bearish again. No, this is Jesus. We had a massive run up off the November 3rd low, or September for silver, but for gold it was November 3rd when the Fed slowed rate hikes, and now we're just having a nice healthy pullback. And yet, we have payrolls coming up next week. We've got the ISMs. We've got some CPI data coming out of Europe as well. But if you look at what the current data tells us, unless we get a dramatic jump in those numbers, yeah, the probability for a September rate hike can go to 100%. Then we'll have to look at the next FOMC. But I'm already seeing banks like Rabobank thinking that the Fed is done. So how much further are they going to go?
Right.
The point is the risk reward in the metals and miners at this point is to the upside.
Yeah.
And that doesn't mean we can't go lower. It just means that the risk is relatively small. The reward is enormous.
Yeah.
So that's where I sit currently with regard to Fed policy and what's happened in the past few days. And I could keep going here, but I'll just add this: the Dixie. The Dixie's got a bounce. I call that below 100. And I said this could go up as high as 102. I think we're at 101.40, give or take now. It could even go up to 106, to be honest. So it can go a little higher, sure. But unless all hell breaks out in Europe and drives the euro lower, the conditions are in place now for a rebound pretty soon. And my parameters on gold are 1900 on the downside as key support. 2000 is the number I'm focused on. Once we get back above 2000, it's plain sailing, in my opinion.
Yeah. We've been on these Sprott Money calls, and on my side, we've been talking all year about how this is analogous to 2010 and to 2018, which were also years where the Fed started with all this hawkish rhetoric and even some, rate hikes or whatever. Mm-hmm. But by the middle of the year and toward the end of the year, it became clear that there was going to be the shift, whether it was an actual shift or whether it was a new QE program, whatever. And it was once that actually happened, everything got held off. We're just waiting for the all clear in a sense. Then once the actual shift happened, up we go. And that to me, that explains a lot of the resilience that we see. Even, today as we speak, gold got down yesterday 1940 something, and now even today, rallied back up to 1960. So as we look forward, David, as we get into August, the good news is there's not another FOMC meeting until September. So we got that going for us. Mm-hmm. However, it does bring the big economic event of the Jackson Hole Forum, where all the central bankers in the world descend on boy, one place you don't want to be in August is Jackson Hole with all those criminals in town. Nonetheless, they all show up there, and Powell will give a speech later this month, and that might be kind of the key to the whole month. But I know you follow the metals closely. This is typically a pretty strong seasonal time of the year for metals prices too. Have you seen that?
Yeah, it is. Seasonally, it's a very good month for gold and silver. Personally, that's a backdrop to the analysis that I do, FIPEST and cycles and so forth. But yeah, everything's lining up for that. And what could he say that he hasn't already said?
Right.
I mean, it's like we're still focused on, I'll use the word crushing inflation, because to me, it's already falling. I do expect a resurgence, by the way. We can talk about that separately. But the only surprise that I would have is I don't know what rabbit he's going to pull out of a hat and be hawkish, because they've already done that for months, over a year now. So if anything surprises, it may be to the dovish side. And if that happens, It's see you
Right.
time. Now, talking a little broader about this, we haven't talked about what could be a minefield for gold and silver. What are the caveats? And stocks. Stocks have had a great run off the lows. I mean, we have retraced, I did the math this morning, 85% of the entire drop from the all-time high. 85%. So we're within 15% of that drop of a new all-time high. Sentiment is extremely bullish. The specs are massively long. If we do get some kind of, we'll either get two things, either a mini crash to let air out of the tires and then we go back up even higher, or we get the main event. Because we are going to get a crash. From my perspective, that's a no-brainer. But I don't know which one's going to play out. But if we get a mini crash, you and I both know, I mean, you can use the 2008 example for the main one, but we know in general that when stocks reverse, they take gold and silver down initially. Initially. And that same goes for the main events. When we get the big kahuna, I expect gold and silver to get a decent pullback. But what happens next? You know, it's, as Rick Rule wisely said once, and it always stuck with me, it's not the crisis that causes gold and silver to go up. It's the response to the crisis that drives gold and silver higher.
Yeah.
And what do you think the Fed's going to do? They're going to do what they always do. They're going to cut rates and they're going to go back to QE. The thing here for me is this time around, given the damage to the economy, despite the data that we're being given, I don't believe that's going to have the same effect this time around. I think the markets will peak and then we're going down, down, down. All the rate cuts and QE that they throw at the market, all it will do is slow the fall. It won't stop it. But for gas and, or sorry, for gold and silver, it's like gasoline on a fireplace, right? I mean, that's when it really takes off. But in the very short term, if that happens, that could bring down gold and silver temporarily. But I don't think we're there yet. So because I see a lot of people calling for this, and my primary expectation is that we get a mini pullback first, and then we go up higher, and then the main event. Because I have my eye on October, because October is the worst month for stocks. You know,
seasonality.
yeah, I mean, look at all the crashes through history. Most
Right.
of them are in October, right?
Right.
And I don't expect this to be different. So you've got that issue hanging out there. The other one I see is the Fed now has been rolled out. Well, that's the pathway to CBDCs. And this is both a positive and a negative. I'll focus on the positive. In order to, you'll be required, I believe, to get a digital ID in order to be able to get this CBDC, right? And in order to promote participation, I believe they're going to roll out UBI, Universal Basic Income, pacify the masses, right? Well, that's basically money printing.
Yeah, right. Yep.
And just press the keys and there's more money in there,
Right.
you know, yada, yada, yada. And more money chasing fewer goods, the same or fewer goods and services, because the economy is going this way. I don't care what the data says. The economy is going this way. Just look at the number of bankruptcies. What'll that do to gold and silver?
Right.
So I guess what I'm saying, and I can get to bonds as well. I expect yields to go lower, but I guess where I'm going with this is we get bogged down in the short-term gyrations in the markets, and people like very easily get bearish, apathetic, you know, based on what's happened even in silver, you know, in the past day or so. You have to look at the bigger picture. The bigger picture still is to the upside, because stocks are going to come off, the Fed is going to respond, and they're going to roll out CBDCs and then UBI. Well, What do you think gold and silver are going to do under those circumstances? You can't print gold and silver, but you don't even have to print the paper anymore. You just hit a keyboard. I mean, it's obvious if you step back and look what's happening. And I think it's inevitable. I really do. And I'll take this moment to say, this is the perfect forum for this. Whoever out there is listening to this, if you don't have any physical gold and silver at this point, get some, because an insurance policy for what's coming, at least an insurance policy. It could make some people uber wealthy, but if you're not that well heeled, at least get some so that you have an insurance policy. Because I guarantee you, we're going to get inflation and then deflation when the Fed pulls the plug on all of these policies, and then you get your great reset and so forth.
Yeah.
And the only safe harbor is gold and silver, physical gold and silver, and maybe physical palladium, physical platinum, but they're more industrial metals. Bitcoin, don't talk to me about Bitcoin. I am long the crypto miners because I think in the short term it's a great trade, but the source of their power is their total control of money and the supply of money. You think they're going to cede that, some of that, to Bitcoin? I don't think so.
Right.
And all of this advertising from BlackRock and so forth, and Larry Fink saying, oh, Bitcoin's going to, be better than all the central bank digital currencies. And I'm not buying it. I think it's just cheerleading.
You mentioned that, reminds me of another thing that's pending for August, and that's that BRICS summit, where, there's all this talk about some potential new trading unit or trading currency or whatever they might announce, that would have a gold backing to give it confidence. And I'm thinking, as I'm listening to you talk, I'm thinking about this, and I'm thinking, oh, I'm sure, the banks are just going to stand down and let the gold price skyrocket if that happens. So I'd say that's probably another risk that we might want to keep in mind as we go through this month, as the banks protect their longstanding short positions, at least initially. David, I don't want to, I could go on with you forever, obviously. And you and I could sit around and talk all afternoon, but I want to focus in our last remaining minutes about a couple of the initiatives you are working on.
I've written a couple of articles called "The Emotion is the Death of Wealth." And you'll understand this, Craig, in the sense that I've never seen sentiment so volatile in any sector like it is in gold and silver, because people are so passionate and religious about it. So that makes sentiment so important. But human nature fights objectivity in the sense that look, gold never bottoms when it's bullish. It bottoms when it's extreme bearish.
Yeah.
But that's when everybody's throwing in the tail. That's the time you should be buying. And it's the same at the top when they're like, oh, we're going to 2,400 next. Yeah. And everybody's bullish, and what happens?
Right.
So human nature is to follow the crowd. You need to be a little bit more contrarian, but especially at extremes. And that's the beauty of my process. I just look for extremes in the COT data, sentiment, technicals. And when they all line up, I'm like, hey guys, caution here, warning. I know we all won't believe it's going to keep going up. No, trend can undermine that, but 90% of the time it holds. Because that's how I developed it. I went back to 2006 and used all the data on every asset, not just gold, silver, nat gas, soybeans, you name it. And it's the same patterns every single time. And if anybody, my point is, this isn't rocket science. Anybody can do this. Just run the charts for all these things and look at the various indicators and what they said at those points, and then just extrapolate it forward. And it's relatively easy.
And lastly, your Twitter handle at Global Pro Trader.
Yes.
Correct?
Yes, that's me.
I would encourage everybody to check that out. David's on there every day, really, giving you his thoughts. I mean, how invaluable can that be, especially as we get deeper into this year and the volatility that is going to continue. David, it's always so much fun to catch up with you. I appreciate all you do. I know that the folks at Sprott Money very much appreciate your contributions every week. And this has been great catching up with you. Thank you for your time. I hope you have a great remainder of your summer. And why don't we try to do one of these again as we get deeper into the autumn, and we'll see how things are shaping up at the end of the year.
Yeah, that sounds great, especially when the good times roll.
Yeah,
Yeah,
it's
we'll
always
have some
more
champagne
fun.
with us.
Exactly.
Yeah.
Well, thank you, David. And on your way out, please be sure to give a like or a subscribe on whatever channel you've been watching that stuff. That really helps Sprott Money as well in terms of casting a wider net. Just a simple like or subscribe. Hit that, smash that button, and help spread the word, if you will. Again, this has been your July monthly wrap up. We'll have more content for you in August, but for now, it's time to go. Thank you for watching, and have a great rest of your week, a great weekend, and we'll talk to you again in August.
Yeah. Thanks, Craig. Bye-bye.